Are you up in arms about student loans? If you're not, you should be. And on today's episode of Crap Now What, I'm going to share with you the reasons why, no matter what stage of the game you're in, if you have young children, you have adult children, I'm reaching out to parents, especially in this episode, about why you should be up in arms about student loans. Let's dive in. 60 to 70% of all students take out student loans. That's not what's got me frustrated today, but there's so much talk about student loans, or has been for the last 4 or 5 years especially. And this is a very important point and why I'm fired up. My company and my team help students who have an enormous amount of debt help to change the narrative and move things forward. This is really possible, but we're going to back up first. Here is what is really wrong with student loan and student loan debt. There is, I believe, and I'm going to be putting myself out there. I want people to argue with me maybe and debate this. I believe that there's an assumption that all student loans are the same. They might come from a different provider, but there's this assumption that when a student is about to go to college and they are applying for and obtaining a student loan, that it's the same one that student B, C, and D are also applying for. Our country is so focused on assuming debt to move their life forward. We do it when we buy a car. We do it when we buy a house. We do it when we go to college. There's just this assumption that we're going to do it this way. And I understand that many parents cannot afford to underwrite the college. That's not the debate in this. Although the fact that we can't is also part of the reason why our children's future is on a setback already. Here's where the student loan debt becomes very interesting. And back to my point, not all loans are the same. I am not an expert on any of these topics that I share. I am a very interested observer. I do work in the financial services industry, and I do help people make plans to help reduce the impact of the decisions that have been made, to help reduce taxes in order to have someone enjoy more of the dollars that they've worked for. So your situation might be different, and you should consult someone before you make your own independent decisions, or of course you can always reach out to my team. Car loans. Car loans are typically pretty straightforward. It can be offered by the dealership through the manufacturer, depending, that's typically on a new car, or it could be shopped out to a bunch of lenders who are willing to finance the vehicle for you. That's option one. And that's one of the things that most people do. Look at their budget, say I can afford a $500 a month car payment. I'm going to now get a car. Same thing happens with home loans. Home loans, if somebody goes to apply for a mortgage, will typically find that there's a couple of different types of directions to go in. A conventional bank, a mortgage loan provider, or even someone online that focuses on mortgage loans. And most people also use realtors, and realtors can be helpful in determining what direction is the best way to finance. There's not a lot of difference between the different types of loans. You might get a little bit better rate one way. You might get more options and variety on directions on how you can actually purchase that home in a lifetime. But again, back to my point, we as Americans are used to subsidizing our life through loans, that we're payment driven. We focus on debt, and that's really not the healthiest way, but it's the way that we are wired, and really it's hard to get out of this. You see other financial experts like Dave Ramsey, who is very much focused on telling people don't take on debt, don't buy more than what you can. Here's the real pain point on the student loans, as opposed to a mortgage loan and a car loan. Car loans work one way, you know you're going to pay this interest rate, and you know you're going to pay this much over time. Same with a mortgage. Right now, people who've taken out mortgages are paying a higher interest rate than what they want to. They're hopeful, though, that what they did was marry the house, and then they're going to divorce the mortgage at some point and refinance. They may not be able to get the lowest rates that we've had way back when people had 2%, but history is showing, and there's some projections out there, that eventually mortgage loan rates are going to go down. Here is why. As a parent, when your student goes off to start filling out the paperwork, yes, FAFSA has that portal to determine what someone qualifies for. So that's got some similar properties to a car loan process and a mortgage loan process. However, there is a point in there where the world, such as you hear with the dog in the background, where there's things that happen and we need to have someone who's protecting us, just like the dog is right now. Anyway, what I'm saying is that as parents, we need to protect our children as they start to go through the loan process. And I've met countless parents. I'm going to be a little harsh. It is a pain in the butt to do that paperwork. I totally get it. It's a pain in the butt to help get the tax return information and all of those details. And it's a pain in the butt to try to guide the children. I've been through it twice. And you do it year after year after year. It is annoying. Nobody likes to do it. Here's where it's critical that a parent gets involved, because I have seen many parents either assume that it's all the same, every type of loan is the same for student loans. They're not. So we're either, unfortunately, assuming that it's just a normal process, or just simply letting the child do their thing and start to adult. Here's the problem. When it comes to start paying off these student loans, there are countless loans, and I'm not going to list the different types because I'm not an expert on all of them. A student loan can be like financing your education on a credit card. I've seen parents shocked when we go to start to look at the student loans and see what we can do to get some loan forgiveness, and find out that there was a misunderstanding or not an education or awareness that student loan forgiveness only applies to certain types of careers or certain types of places where they decided to work, such as in a medical field where you do private practice, or be in a hospital. Hospital might have better options. Again, I'm not the full-on expert, but I've watched countless parents not aware that it could have helped guide a child into a path that would be more economically better for them, at least for the first few years. I believe, again, that this is unfortunate that we've allowed our children to adult and expect that we just didn't anticipate it. I'm not blaming parents, but I'm reaching out now to parents especially that have children that are about to go through this process, to keep your eye on the ball. Understand the loans. Some of these loans, especially private loans that are offered through other programs that are not government backed, and believe me, if it says a credit card name on it, the interest is being calculated daily. And I'm fired up about this because there are countless young people who have over $100,000 in student loan debt. And in order to solve this challenge and unravel this situation, it becomes disappointing and it becomes shocking for the parents and the student. It becomes frustrating and even more impactful and emotional that not only is the debt this high, but to learn that there were paths or decisions that could have been made that would have helped to offset some of those expenses somewhere along the line with a career choice, just a small tweak, even to find out that potentially if something happens to the student, not always, not in all situations, but potentially the parent will need to take over the debt. And the one that makes my stomach hurt the most is the fact that interest is calculated daily. Here are the other reasons why this is a problem. And then we're going to bring this home as to what the future could look like. It's a problem because our children are young adults and they don't know. They think they're doing the best decision they can. I get it. Like I said, as a parent, who wants to dive into the student loan paperwork? But I'm imploring you to do so, to help guide your child. Here's why. Like I said, not all student loans are the same. The interest gets calculated daily on many of these loans when it comes time to start paying them back. The amount that's getting racked up. I've seen countless young people who start taking out their initial student loans, get an offer for more loans, and basically are living off of their loans, not really understanding what it's going to look like on the back end to be paying off this debt. It's just a rolling situation. I've seen many parents who've been surprised by that there have been this many loans over the course of time. There are programs out there that students get offered that can't be trusted. A person who's smart and educated and experienced, it's the experience that I'm imploring you as parents to use. Use your experience of understanding how the world works and that sometimes things aren't as good as they look. And there are many programs that our young people have that have reached out to them and said, hey, you've got massive student loan debt, let me help you. And then there's charges, there's no follow through, and it just becomes a mess and another frustration. And some of this was caused, honestly, in my opinion, when we had a presidential candidate who promised to do loan forgiveness. Because in that moment, not only did it buy this person, President Biden, votes from the young people, but it offered to certain types of students an open checkbook to take out as many loans as I want, not worry about it. It's going to get taken care of. I'm not going to have to worry. And not every child and student, and I'm saying child just in this stage, and I don't want to offend young people who are in their 20s and call them child. I'm saying this from the spirit of, unfortunately, the world hasn't given you the experience necessarily to understand how to handle this particular situation. Now, some students, when they were waiting to hear if they were getting loan forgiveness and if they had a little bit of a bank of money, set that aside until they found out whether or not they were going to get any forgiveness and then paid that. I know this personally because my two children did that. And that helped to save them from a bad situation of continuing not to pay or save up the money. They saved up the money assuming they were going to have to pay, put it in a bank and hoped that they could have used it as a down payment on their first mortgage, and then found out, well, that amount of money that they saved now has to go to their loans and get that taken care of and just be done. So at least in that particular situation, it was easier for them. But I know countless parents who are helping their children and students who are looking at over six figures and don't necessarily have the income to start paying that off. Even someone who's in the medical field could potentially have the income to pay it off, but it's still a huge setback. $1,000 a month, $1,500 a month, $2,000 a month going to student loans. Do you know what that prevents that student from doing? If your student loan payment is $1,000, actually any amount, it is preventing a student from, or a new graduate, from having the opportunity to put money towards their future, whether it's a mortgage, whether it's starting a family, whether it's opening up that business that they've always dreamed of. And I'm also going to say that this challenge, the fact that somebody's paying this much money on a student loan, and if they can't keep up and the interest is growing and growing and growing, again, financing an education on a credit card is so mind boggling. And the ripple effect of the lack of funds for the new professional, for the graduate, to be able to start their family comfortably, to be able to live comfortably, to live like their parents did, to live how their grandparents did, to have money to put away for retirement, which I'm a huge passionate person about, and helping people to have funds and enjoy their money in their future and actually be able to see that they can retire. So we're talking about a whole generation that is buried before they really get a chance to start. That is why parents need to be involved in the type of student loans that are being applied for and accepted. It's very critical. I would love to go back in time and help parents to find a way for even just $300 a month to start setting aside the money so a child doesn't go through this and the family has the opportunity to have a more comfortable lifestyle for the graduate. However, we can't go back in time. So what can we do? We can change the narrative. As adults and parents of new graduates, I'm imploring you to get involved in helping the next chapter of decision for the new graduate who has at least $100,000 in student loan debt. This is not a sales pitch. This is me reaching out with my hand and saying there are options to still maneuver a path that doesn't sink a new graduate with their debt. What it does is to help potentially minimize how much is going towards the debt each month, and instead reverses the process to reallocate what would normally be the payment they would have to make into a place where it's going to help them to build a future. The costs for making this pivot are minimal. It's legitimate. It is still approved by the government. Nothing is being done that's wrong. But what it does is it puts professionals, analysts in a position to do the paperwork, make the edits, go through the process on behalf of the graduate in order to navigate this process. Because for those who do embark on turning in the paperwork on their own, on average, it takes 5 times before the acceptance to be in a program where in 20 years from now, the loans are forgiven. So I am saying there's a helping hand for those students that have more than $100,000 in debt and are getting out and being out in the world and now are facing massive payments each month. Many doctors have $200,000 to $250,000 in debt. That's a $2,000 a month payment. $2,000 a month payment. Most people don't even want to pay that much for a mortgage, let alone the burden of the student loans. And I'm going to call it a burden because it's like an ankle. It's like cement on your foot carrying around that student loan. So what I'm saying is that there are legitimate programs. My team is helping people with legitimate programs navigate the paperwork and take it over, get the approval for the program, and then turning around and making a plan for what happens in 20 years. Because at the end of the program, to be 100% clear, at the end of the program, there are taxes that are due. Back to my specialty of helping to minimize taxes. There will be taxes that are due on the amount of the loan. So what we don't want to do is be unprepared. We want to be set up in a position that the graduate, the new young professional, has comfort during the process, is putting their money towards their future rather than their past. That's very important. This is flipping the narrative. Take the money that would normally be paying a student loan, get into that forgiveness, and use that money to build a future for their family, their young family, and potentially break the cycle of student loan debt over and over and over again. This is legitimate and this is very important. And I want parents and I want new graduates to hear this because time could be of the essence. Back when Trump was in office, he wasn't a whole big fan of this, but the team that is working on this is still getting approvals. We did see, if you're looking at this particular podcast and you're listening to it, it's about 2 weeks after the inauguration and Trump's in office. And he's signed a whole stack of things. Everything that he wanted to change, he's done executive orders on. So the likelihood that this is really on the radar is pretty small. But the call to action is for anybody. Don't put it off. It doesn't really matter if we're going to worry about whether the program's going to go away. We're still talking about student loans that are accruing debt. We're talking about student loans that are like a cement set of shoes and holding our graduates and this generation back from building their future. No wonder children are waiting longer to get married. Young adults are waiting longer to get married because they're trying to get their finances in order so they feel comfortable in a relationship and moving forward. So what I want you to do, parents of young children, please look inside as best as possible as to what you can do to start saving some money up for college. I get it that that's not the easiest, but look to professionals such as myself, my Wealth Strategies team, who have ways to help grow the funds in programs that are not 529s. 529s have a lot of parameters on them. That's been a topic on this podcast before. Please look at other options. You're always welcome to reach out to my team for that. Parents of teenagers that are about to go into college, I have dedicated this podcast to you to implore you to not turn a blind eye to what your student is doing when they're applying for loans. Yes, I get it. You want them to adult, but they still need you. They need you to navigate not just the paperwork, but the understanding of what they're signing up for. That's imperative. Help them to understand what they're signing up for so that later at the end of the student loans, at least at the end at graduation, you know, they know, everybody knows what they're going to be facing when they go to pay these off. And for those of you who are recent graduates or parents of recent graduates, reach out to my team. Be careful what programs online you find. Again, you cannot trust all sources. I have, over the years, found people who said I can help, and then it turns out that the amount that they want a cut of that monthly payment. That's ridiculous. There are legitimate programs that want to be paid to have the paperwork. Most of those, and the one that we're associated with at this time, it's about $1,500. $1,500 to have someone navigate the paperwork, but it's not a monthly payment that they're taking like some of these other programs. And it can really make a difference. If you're a parent, and I have clients that I've worked with who promised that they would pay off the student loans for the child and now are burdened with very large monthly payments on one or multiple children, this could be for you as well. At the end of the day, what I want you to do as parents and new graduates, get an education as to what the best options are, understand that this student loan package that is now due can be a huge burden. And what I want for you is to have the best opportunity for the best future. Okay. Again, my name is Shaunelle. My company is Blazing Star Wealth Strategies. If you like what you're hearing, and I do appreciate the new followers and the people that I'm meeting all over the world, actually, who have said that they like hearing some real talk and encourage me to get out there and be real with these topics. So I appreciate that support. Soon you're going to see some of these same people as guests on this podcast, and they've been sending in topics for me. So I'm very excited about that interaction. If you like what you're hearing, please, you'll follow this podcast on all of the different channels. Please send in input, anything that you would like for the interaction. And please know from the bottom of my heart, what I want is the best thing for you and my team and myself personally will be happy to answer any of your questions or help point you in the right direction. Thank you too to Caleb, who is the producer on this, helps to edit everything and get it posted all over the platforms. I speak your kudos and accolades to everyone that I meet, and I look forward to another visit sometime soon. Next Monday, I'll drop another one. Thank you. Okay, so if you're still listening to this podcast at this stage, this is the boring stuff. This is the disclaimer. And I'm doing this because, yes, I do care about who you are and what you do with your money. And I'm going to be here to help give you some ideas. However, these are just ideas. They're theories. Sometimes these are ideas that are coming into my head based on what's going on in the world at this time. And they're not necessarily specific financial advice. I do encourage you, if you decide to do anything with your money, make any changes, seek the advice of a professional. You're welcome to follow up with me or with someone else, and make sure that what you're doing is something that fits with you, your lifestyle, your finances, and it's a strategy that's specific to you. Again, these are ideas and concepts. Do not necessarily take these as specific financial advice and follow it directly without having a full education.